Oh, that's good. Can actually see people.
Hi, good afternoon, everyone. We're just waiting for some people to join us. So do bear with us and we'll start in 1 minute's time. Thank you. Good afternoon, everyone. Welcome to this IED partner webinar. My name's Kate Martin. I'm an IED director, and I'm also the executive director for City Futures for Sheffield City Council. I'm delighted to welcome everyone here today. And for the next hour, we're going to focus on hearing some amazing work that's been going on with our colleagues from Edge Hill University. Thank you for those of you that are members that are joining us today, and also non-members. If you are interested in joining the IED, do contact us or reach out after the seminar, and we can put you in touch, or you can find out more information on our website. So without further ado, the format for today is we have two 20-minute sessions where we're going to be hearing a bit more about the work that Edge Hill University, as part of the Productivity and Innovation Centre, have been undertaking around their SME work and growth potential. It's a fantastic piece of work. Edge Hill University have been identifying businesses to work with growth potential, sharing how they've supported these businesses to unlock that potential and also their growth model. So I won't say anything more about that, but I'm really delighted to welcome today Professor Simon Bolton, Director of the SME Productivity and Innovation SME Growth Observatory as well, and also Michael Banford, Associate Director of the SME Productivity and Innovation Centre at Edge Hill University. I will now pass over to Professor Simon Bolton, who will share more about the amazing work that they've been undertaking. Thanks, Simon.
Thanks, Kay. Just put a bit of context. So, welcome. What we're going to do is give you a talk about two things we've been doing. Is that we've just finished a major report baseline review of Liverpool City region, and in that baseline review, we've developed some methodologies for identifying growth potential businesses. Why is this important? Why it's important is the fact that we're going to have less money to invest, and we have to have greater clarity on where the opportunities are and where the requirements are. So we set out 18 months ago to work with professional business services. This tool can be used against multiple sectors, and we're going to share with you is a methodology of how we can identify regional growth potential, pinpoint that within both regionally and localized activities. We're also going to show you some tools that we've enabled us to evaluate Liverpool against the 11 other cities in the country, so they can have a comparative analysis. And finally, we're going to show you a model of how we predicted how Liverpool can generate £500 million worth of growth by investing in identified growth potential companies. So what this enables you to do is give you your strategic planning focus. What we're then going to do, Michael's going to talk to you about how we use some of these tools to drive regional-based growth, and he's going to give you a case study of how in LCR we use these tools to pinpoint and identify growth potential businesses and realize that and the impact that has on the economy. So I realized that we're going to wait until at the end to ask some questions, so I look forward to you enjoying the presentation and so forth. So as I just said, is the fact that what we're showing you here in this first stage is our future growth potential tool and process. The great news is we're just about to embark on a major piece of work with the Department of Business and Trade. They validated our methodology and asked us would we contribute to the professional business service review in the new industrial strategy. So we're quite excited about that, and that's only just happened in the last few weeks that we can tell people about it. So this is a comprehensive approach for fostering business growth within regions. It's a systematic process for using public available data to identify growth potential businesses at different stages of life cycles, from startups to established enterprises that have growth potential. The difference is that this is not, we use Bowhurst, we used Full Circle, we use Red Flag, but we've got some unique algorithms that allow us to identify what we call growth potential organizations. That's the important thing about it. So the methodology and tool we've developed is not, it's sector agnostic, is that you can use it on multiple sectors or individual sectors. The actual case study we're showing you is we focused on professional business services in that particular model, but it's not unique to that model. This is a repeatable and scalable tool. It can be used at a local level to determine the economic sectoral contributions at a local level. It can identify top performing sector companies by boroughs. Nationally, you can compare economically key locations, i.e. cities. And regionally, it can help you establish the sectoral contribution of these sectors to the overall value of your region. It can identify top performing companies within those and identify those businesses at a local level. Its purpose really is, it's got several purposes, is to establish the contribution of sectors to economic growth, because there's a lot of discussion. It was interesting in the PBS sector, is the in Liverpool, it's known that PBS was a major contributor, but out of 60 billion, it was 37 billion. And it's been widely accepted this, that, it has been used now in LCR, Liverpool City region, because it's given a real insight to the contribution of that sector to the overall economy. And just as I've just described, it determines this economic contribution at sectors at a local level. So we've drilled down into boroughs. So in terms of like a combined authority, is they're made up of a number of local regions. We've been able to look at the overall region and break it down then by locality. What we've been able also to do with this tool is identify top performing businesses in each of those both local and regional levels. As I said before, what was really important was we were able to do a comparative analysis to understand how your key cities or key locations compare to other key locations around the country. It's helped us to do some other things as well. We were able to establish the key enablers of innovation and growth within the region based on some of those sector analysis. And most importantly, it's enabled us to identify specifically growth potential SMEs. And it'll become more apparent as I go through the presentation of the value of this is that we have a growth and generating model. We identified 2,200 companies, which will show you 1,200 of those real potential. If you achieved between 20 and 30% success rate, investing £15,000 investment of growth support, the success rate will generate between 250 and 500 million in growth output. Also behind this is that we understand the SME growth needs. So there's a combination of understanding the potential in your region. Where are they? Who are they? What stage of their life cycle are they, and what growth support do they need? So we've established a mechanism for looking at growth needs in there. And then the final thing, as I just said to you, is this impact in things. So this was what our project was called, 500 million. How could we identify 500 million of growth within a region? And we did it. So the economic sectorial contributions is that you can see here is the in the report. I said to Kate is that we have an executive summary which we can send to you. I wouldn't inflict the 250 page that we've done in the whole thing, but you'll see is that what we were able to do is to provide a clear understanding of what the value of the sectors were within the region, the number of firms within those sectors, and their overall contribution. And what was interesting, Liverpool is professional business service was unknown. And you can see from here, and with the government new mandate, professional business services are higher on the agenda. But you can see this has been able to understand at a regional level. More importantly, because you have constituents, is the fact that we were able to dig down and break down the LCR region into constituent components. So we had the overall region and then by specifics. What we also looked at was, sorry, I've got the wrong title on here, is that we what was interesting is to compare Liverpool or a city against other comparative cities in the UK. So we were able to analyze. We took Liverpool City region because that was the dominant location, and we analysed it against other dominant locations within the UK and other PBS centres. And you can see we were able to look at both financial service, professional services, and business services, and so Liverpool could understand where it's at. And behind that, there's a whole narrative of why these other cities, but each city, what was the factors that were helping them grow, what was constituting to that growth, and what was differentiating them. This work helps policy development, and it also helps position strategies within regions. And this, our main focus and interest is identifying growth potential businesses. And what we mean by those, these are not scale up, they're scale up potential businesses who have the potential to scale and contribute to your economy in that process. And you can see what we've been able to do is our model segments businesses in different life cycles. Why is this important, guys? This is important because it enables these different segments, lifestyle segments, have different business support requirements. So we're able to identify the growth potential businesses at different stages of the life cycle. And our interest was in the yellow area, that actually identifying the high growth and scale up potential. And by being able to target these organizations, they have a potential to add a significant economic impact to your regions. And in simple terms, we're able to identify 40% of these organizations that had scale up potential. That's great. But we have an additional level of analysis that allows us then to dig deeper into these to actually identify which out of those 5,000 companies would be have the most potential to invest in. So from that, we were able then to start modeling is that if we now we've identified these businesses by understanding their business requirements, their business support needs, we were able then to model if you supported these businesses and achieved a percentage of, we're not talking about achieving 100% growth or success rate on these companies. And I'll show you, we're talking about 10 and 20% growth achieved success rates that enabled a massive contribution both in jobs and also in terms of potential revenue to the market, to your regions. And this was part of our model to help regions to say, well, okay, that's great if we identify them. Who are they? Where are they? And what is the implication if we invest in these businesses to grow? And the implication is it can contribute up to between 250, potentially 250 million to 500 million. We know this because the fact that we run, I'm not going to steal Michael's thunder. We run a centre that generates 29% growth in businesses, contributes 2.2 jobs per company, and has contributed 50 million in Lancashire alone in the last 5 years of growth. So we've got a combination of statistical analysis and our benchmark data that we've created these unique algorithms with. Underpinning this is that we were able then, I've just highlighted some of the factors that I've just shown you, we've been able to help regions understand the constitution and their value. What are those the high growth potential businesses? Where are they? What would be the impact investing in them, and then we created a model in terms of demonstrating is that what are the growth uncertainties and requirements at these different stages. What we actually did is we, within Liverpool City region, we mapped existing business support against each one of these cycles. So that what was really useful for the LCR was to understand the opportunity and where the programs either fully supported that need or where there was potential to need to invest to achieve that growth. So it helps to sort of provide a holistic perspective of the fact that the value in the region, locality, what those growth potential organizations are, and what are the specific needs that they need to focus on to help drive those growths. From that is you say, oh, that's really good, that, but how do you do it? So, interesting information. So I'm not going to I'm not going to bore you to death with each of the slides, but we have a three-stage process for evaluating regions and their data, which is that talks you through the stage one, going through, and anybody who wants to report can see that process. And then more importantly, we go into stages 2 and 3 where we've modeled the growth potential. And then it's about using that data to engage with SMEs and connecting the relevant support agencies and support offer to those organizations, and then finally having the mechanism to analyze the impact for your region. So that's the methodology. We've been doing this on a regional scale for the last 8 years, both in Liverpool and Lancashire. So I think that what I just recap is that we're in an environment where we're going to get less funds. We have to make funds be more effective. Our tools help you to pinpoint need and opportunity and establish specific companies in specific areas that have the potential to grow. We've got tools to link those needs to the business requirements that enable you then to map your current provision within your region and connect delivery partners to these potential organizations. And the overall impact is significant. I think that what I'm going to do now is that gives you the strategic approach that we do, and that is, as I said before, we're just about to embark on supporting the Department of Business and Trade in the professional business area. We're going to do this nationally over the next 3 or 4 months to support the new industrial strategy. But what my colleague Michael's now going to talk to you about is like, well, once you've got that data, what do you do with it? How do you make it real? So, Michael, I'll stop sharing my screen and pass it over to you.
Okay, thanks, Simon. So we'll do a quick costume change, which hopefully you can see. Can you see that okay, Simon? Is that up on the screen? Yeah. Okay. Well, good afternoon, everybody. So my name is Michael Banford. I'm the Associate Director of Edshill's Productivity and Innovation Centre, and my job is to oversee the delivery programmes for the contracts that we have with the Combined Authority in Liverpool City Region and various boroughs in Lancashire to deliver innovation support and advisory services on the ground to businesses. So what Simon's just been talking through and the methodology that underpins that document was really come out of a lot of practice-based research from the practical delivery side. So observing the organisations that have been going through of our programmes and looking at some of the common patterns and trends of those organisations, and that ultimately then gets fed back round to improving the support that we're able to provide. So what I'm going to talk through for the next 10-15 minutes is more of a practical approach of how do we use this on the ground with our business engagement teams and delivering our particular programmes. So the remit that we have with the Combined Authority in Liverpool and our partners in Lancashire is to identify and to support scale-up up potential businesses and help them to stimulate that period of growth for the organisation, creating jobs, technologies, new products, services, etc. So I'm going to talk through specifically how we've applied this in practice in the Liverpool City region. So before I get into it, I just want to wind back slightly and just to define what it is that we mean in our centre by scale up businesses. So the OECD's got a definition of a high growth company, which I'm sure you're familiar with, minimum of 10 employees, achieving a 20% year-on-year growth for 3 years of either their turnover or their headcount. But scale up businesses is a slightly different bracket of organisation than the high growth startups. So we're looking specifically at businesses that are established. So they've gone past that initial market traction or growth. They've validated their products and services within the marketplace. They're still going to be experiencing a period of high growth. So scale-ups are experiencing periods of high growth, but usually it's based upon a strategy that's about the better use, tracking and allocation of their resources. So the profitability and the growth of profitability is absolutely crucial for what we're looking at. And why do we focus on them? Well, there's 5.6 million businesses in the UK. The overwhelming majority of them are SMEs. But the entire economic output of SMEs, 58% of that comes from 0.5% of companies, which is quite an astonishing statistic. And we were happy to share the citation from the Scale Up Institute on that after the presentation. And those particular businesses are hiring graduates and apprentices at twice the rate, typically in other firms, and often engaged in much higher levels of technology adoption and innovation. And as I was saying to a group of companies who we're supporting, who started our program only yesterday, if you were getting nearly 60% of your revenue from 0.5% of your customer base, you'd want to look after those companies, those customers, very carefully. But the more important question they would be asking is, well, actually, how do we find more of them? So what we are aiming to do through our centre is to identify not the companies that are already in that phase of scale up, but which are the ones that present with the characteristics that they could, if supported effectively, achieve that level of growth and impact for their regions. So our first objective in this is to assess the potential that's there. We have a finite amount of resource on our program, and we have to direct that most effectively to give maximum return and value for the funders that we're working with. So having a little look at the Liverpool City region. So what are we starting with? There's nearly 90,000 companies. The overwhelming majority are SMEs. And if we take the established definition, there are 329 of them that, using publicly available data, are visibly in a phase of scale up. So from our point of view, that's a very large population of companies that we need to think about carefully. How are we going to spend our time most effectively to support them? So our assessment of scale up potential works in two stages. The first is using publicly available data. So the wider methodology is what Simon's just talked through, that he's applied to that report. But essentially, there are three components of how we concentrate that 90,000 businesses down to something that's much more manageable. And we're looking predominantly at three things. We're looking at the maturity of the life cycle of that business. We're looking at factors to do with their financial performance, recent past, and looking projecting forward as well. And we're looking at the market environment in which they're operating in. So how conducive is that environment likely to be to supporting that particular business to scale up? That allows us to concentrate that population right down, and then we can start to do some much more targeted engagement with our diagnostic tools, looking at leadership capabilities, the innovation capabilities of the business, and also their digital readiness as well. And this allows us to concentrate that 90,000 down. So our analysis shows us that across all of the sectors and all of the boroughs in the Liverpool City region, there are 14,700, give or take, businesses who have genuine, in our opinion, scale up potential. So this is the information that we will arm our business engagement teams with straight off the bat, to think about how are we going to approach and target those organisations. And you can see from the graphics on the right hand side, whilst yes, the majority of them are in the centre itself, in Liverpool, the city, which you'd expect because that's where the highest density of businesses is. Actually, there's a really good spread around the various different boroughs in the city region. And the point that I want to make about the sectors is that, yes, you're going to find scale up potential businesses who are working in the frontier sectors, highly specialized technologies of manufacturing, etc. But actually, there's an awful lot of scale up potential businesses that can be found in the foundational sectors as well across the economy. So what does that mean in terms of potential? Well, the current performance of those 14,700 businesses is 17.9 billion turnover, and they employ nearly 157,000 people. Now, it would be a monumental effort to try and capture the growth across all of those organisations. But the big picture potential is if we were able to stimulate those companies into a phase of scale up, it would add an extra 13 billion and 114,000 jobs potentially into the economy. So there's a lot of potential that exists there to orientate our resources towards. But there's a challenge when you're trying to do this on a very practical level. A lot of the organisations which demonstrate potential for growth sit somewhere within that Venn diagram of what notionally is understood as hard to reach businesses. So businesses that typically have lower levels of productivity, so their productivity literacy is not as strong as others. They're less likely to be formally engaged in R&D, and they particularly are likely to have lower levels of engagement and stepping forward for business support. So they're not putting their hand up to say, we have potential and we need your assistance. And the quote from the British Business Bank on the left typifies an example of one of the barriers as to why these types of organisations aren't stepping forward. So we have to go and find them. We have to be proactive about it in order to get them engaged and give them the support. But the data allows us, as Simon was indicating, to go a little bit further, a couple of steps further, if we're going to try and engage with these businesses. And from the hundreds of companies that we have dealt with over the last 6 or 7 years, we've been able to identify some patterns around the likely growth strategies and the firm level needs that these organisations are likely to be facing. And the reason why this is important from our point of view, for our business engagement teams, is it allows us to create relevance to the offer so that we can walk in and have meaningful conversations very quickly with these organisations. So when a business wants to grow, there are only 4 types of strategies that they can pursue. We focus on 3 of them: market penetration, product, or market development. And their needs that they will present with at a firm level are typically around the combination of ability to generate demand, so to be able to stimulate that sales revenue, linked to their processes and operations, so their ability to automate and drive efficiency, use of data and digitalization, or the structure of their organization and their workforce. So we're really interested in how fit for purpose is their business model to enable them to grow. So the data allows us to have some level of confidence when we're starting to engage with these audiences. What is the type of strategy that they're particularly likely to be approaching, even if they're not using this language? And what are some of the firm level needs that we're immediately going to connect with them upon? And if we go back to our 14,700 that we've identified of growth potential, and we apply some of the benchmarks that we've got in our data, we know, or we can see, that overwhelmingly the vast majority of them will see their growth through a market penetration strategy. So capturing more market share, not requiring substantive changes to the products and services that they're offering, but it's actually more about the business model and how are they going to capture additional share. Yes, there will be a certain portion of them that will see it through product development and slightly less who see it through market development. But the overwhelming majority of that data shows us that it's market penetration that needs to lead with how we approach these organizations. So we've got the data, we've understood who's there, we've got a reasonably good idea about what sort of strategies they're likely to be pursuing or attempting to pursue, and some of their firm level needs. How do we action it? Well, quite simply, there are 4 steps. We will always create a territory development plan. So we will use this data to map who is there, what sectors they're in, subsectors, and their locations. We'll curate the communications. So this is relevant to or relates to what we know about or what we can predict about their likely needs, and we'll run targeted campaigns on that. These companies are not stepping forward the support. We have to be proactive. We have to go at them and approach them directly. and then demonstrate examples of success, companies will be more encouraged to step forward when they can see others who've done it as well. So it's quite a simple process. The proof of the pudding is always in the outcomes and the impacts. So we've supported just over 300 companies in the last 6 or 7 years. We know it's created nearly 600 jobs and pushing 150 new product launches to the market. But we also know from the longitudinal data that on average, they're growing by 29%. So we can stimulate or help them to stimulate their own growth. And the investment we've received from the mainly ERDF funds, UK Shared Prosperity Funds, latterly, £13.90 for every pound we are given, we will generate back. And these figures endorsed are what led to our endorsement by the Scale Up Institute, who spent a lot of time independently verifying the data. So from the point of view of practical delivery on the ground, we're confident that this process is working, that this methodology is working, and the more data that our delivery team can offer Simon and the research group, the better refined these approaches can be. So, and just to throw up an example of one of many businesses who we've supported through this process very recently finished, and we'll share these slides afterwards so you can have a little look at some more detail. But yeah, so the practice-based research that comes off the back of the practical delivery helps Simon's team to enable place-based reports. Obviously, the regional level reports, Sam's given you the example of the baseline review, and then more latterly been asked to contribute nationally for the industrial strategy. So so that's our example. So thank you very much for listening, and I'll hand back to Kate, who I think is going to do some feeding through of questions. Thank you.
That's great, Simon. Thank you. And also thank you, Michael, for those brilliant presentations. It's really great to see the Future Growth Potential tool and the process, and to see and to hear a little bit more around the case study, focusing on the Liverpool City region and some of the partnerships that you've been working in. So thank you for that. I think it's really important at the moment, as we're all considering our city, regional and area growth plans linked to national government policies, as well as economic delivery strategies. So I can see there is huge potential for the work and the research and the examples and case studies that you shared. So thank you for that. We have a few questions, and I think the first set of questions really just some extra clarifications, I think, from some colleagues on the call today around some of the definitions. So a couple of questions first to focus on. How are you describing your definition of growth and scale? I know it's quite a big question, but just for this particular tool, how have you looked at that?
I think that there's an OECD definition of scale up businesses, high growth, and that means that in the traditional model is that these businesses have to grow by 20% by 3 years. So that's the typical definition that is nationally and internationally used. We talk about growth potential because the reality is that we know that most people use the system they use. If you put 20% growth in for 3 years, the number of companies you find is quite focused, let's say, in regions. So we can't share with it because our algorithm is unique to us. That's our commercial activity. But what we realized nearly 10 years ago that if we only use the OECD definition, the ability to identify businesses who've already gone through growth was limited. So what I can share with you, I've done some analysis of like there's 10 or 12 different tools that people use for economic development, and they're really useful. But what they're good at giving you a snapshot of where businesses have been. So our algorithm looks at public available data and uses our 5 to 8 years benchmark data metrics to enable us to identify these what we call growth potential. And what we've done also, just to answer that, we've segmented that into 5 phases from startup to second mature growth, because there are growth potential in all of those sectors. I hope that, so the key issue you're asking, we don't use the OECD definition of 20% growth. Otherwise, it only gives you a certain level of data.
That's great. Thank you, Simon. And just a further clarification and definition as well, before we move on to another theme of the questions, was about describing a little bit more and sharing with the group around what you mean by a repeat scale up when you describe that. I think it was in your presentation, Simon.
Yeah, in that process, you have businesses that have gone like, the easiest way to describe it, age is not the total factor, but they're a mature business. They're probably between 15 to 20 years. They've scaled multiple times. So your organizations that are, anything from 25 to 50 million, who have gone, they get to a stage where they need to rescale. So they're some are second scale and some are third scale. So that's the different. They're the ones that have gone through that cycle already. And one of the key differentiators is age of that business and obviously turnover that they've been through. So they're organizations that have already gone through high growth. They've scaled and they then need to scale again. And the easiest way of describing that is that at that stage, they have to grow through a combination of organic growth and investment and acquisition. So that's where they get to that second stage. Is that many of you guys will be actually actively involved in inward investment and financial investment. Those are the companies who take those at the mature stage are typically what we would describe as the second and third stage organizations for scale up.
Thanks, Simon. We've got a number of questions both in the Q&A and in the chat as well. Colleagues on the call that are using the Buhurst model at the moment, and specifically a question around, does your model identify high growth businesses? And if it does, how does it identify them by sectors, or are the businesses listed out individually?
No, we use all the systems. We use public available, but we have developed a unique algorithm that takes multiple systems, and our system allows us to do by sector, by region, by company. So yeah, Michael showed you the territory plan. That is an example. Our system allows us to segment the data in any way we want to do it, but the important thing is that we use public available data. That's why what's interesting about our evolution, we had a lot of kickback initially from the LCR about the quality of the data. Once we showed them the data analysis, they actually came back to us says, we agree with your analysis because we're using public available data. It did help that the government came in and said that they validated our model. So that was quite good. But we use public available data and we add an additional algorithm to that to allow us to dig deeper into certain parts of it that other systems don't do.
That's great. Thank you, Simon. We have another question around the turnover. So there was a question on the Q&A just asking around, was there any reason why turnover was estimated and not taken from latest file accounts? Any reason why that might be, Simon? I think, again, that referred to your presentation.
Well, they're a snapshot of those times. If they run it on real life, is that they're not the data is at that particular snapshot in time. So it's not estimates. It's what it just as period of time changes, it would, if we have a real life system, but what we've shown you is as at that point when that analyzed, that's what the estimated turnover was.
Yeah, and also bearing in mind that not all companies are legally obliged to declare it.
Yeah.
And
I think, and that's a really important thing, Kate, to the guys, is that Michael touched on in his presentation at hard to reach companies. And part of the hard to reach is that they're not required to give, there's no consistency of data in the UK. I.e., because you're not legally obliged. So this is where our algorithm addresses some of those challenges of those organizations. And in most regions, you have a lot of companies under 10 million who don't have to submit turnover. So that's one of the other reasons why we have estimate, because we've used other algorithms to address those companies who don't have to submit their overall turnover.
Thank you. Yeah, that's great. So we've also got some other questions in the Q&A relating to the pre-scale up environment, in particular around how would we identify high potential businesses to provide that support. So how has this methodology been applicable? How have you done that? And that links to another question around how did you identify the SME needs initially before starting the process?
Michael, do you want to talk about some of the needs that we have?
Yeah, well, the firm level needs. So we originally, before we started refining this particular methodology, we've which has been honed over quite a period of time. We were relying on people's personal experiences, documents that were produced by the city regions, based on their best intelligence. We, used some of the academic literature that was indicating what the likely needs are of businesses at different phases of their growth. So bringing all of that together is where we started. And then over a period of time, what we've been able to do through engaging very intensively with these businesses is actually to collect a lot of information about what their firm level needs actually are, how they describe it in their language, and then being able to categorize those needs so that we can refine our approaches over a period of time. So it's constantly evolved, but it's been a combination of what's published in the literature, but also our practice-based observations of working with these businesses over a long period of time. So it's that trend data.
And it's a triangulation, Kate, between research. There's 25 years of research gone into this at different phases. You've got government and policy reports, and you've got regional data. And what we've been able to do is that we have a very large database now of businesses who we analysed. We actually practice what we preach, is that business technologies, is that we've done a lot of work on the adoption of business technologies. Data literacy is one of the key things we found is holding back growth in the UK. And what we've done is that over the last 10 years is that we've built from academic literature, OECD reports, European Commission, UK, analysed all that data, plus actual working with businesses and validation by key partners from research, academia and the government.
Fantastic, thank you. We've got a couple of questions now around the scale and the application of the model, and kind of what would the best geography be. So a few questions both in the chat and on the Q&A around if you're not a city, if you're not a large town, what's the kind of area or geography that the tool and the model works best on? A suggestion from two of our questions, a suggestion from two colleagues on the call is around our travel to work areas, a good geography. So it'd be good to hear a little bit more about how the geography can be applied. Small scale, larger scale.
Postcodes based. It's postcodes based, Kate.
Yeah.
So that's how we select areas. And as I'll talk you through how we've evolved. 8 years ago, we were doing a very localized areas, and then we went to more areas, boroughs. Then we went to regions, and now we're working on a national scale. So the issue really is that the only thing that defines us is what our search criteria is. So we work with partners to agree how they define their regions by postcode. That enables us then to accurately target that data against those organizations in those regions. So if you wanted to do it on a very focused area, our first question is we would define what that postcode regions are. We'd sign that off, and then that gives us the scope of where that stimulates our data collection, Michael, doesn't it?
Yeah, it does. And if there was a part of the question that was thinking about the scalability of the program itself, well, we're a good example. If you're not familiar with the geography, Edgehill's based in a small market town, semi-rural West Lancashire, and most of what we do operates digitally, so we can work across the whole of the city region, urban areas, rural areas. Geography is not a restrictor to our ability to scale our delivery program.
Yeah, and I think one thing that one of the uniquenesses about one of the limitations of the program was me. It was the fact that a lot of these programs are personality based, i.e., individual knowledge of individual people within the systems. Me and Michael, about 5 years ago, realized the fact that there's only so many companies that myself and Michael could deal with. So I wrote a critical reflective mechanism that enabled key questions to be asked about growth. And we developed that into a digital tool. So we've been able then to scale our program into 15 new business development coordinators. So we're able to work with partners to transfer our model into other regions, but we could do it. We could do a train the trainer model because it's digitally based. It's not a geographically sensitive starting point. And we went from the physical, and I think that we use digital platform tools, and we'd never go back. It really 5 years ago, it was a combination of just before COVID, we were looking to go digital, and I think that that combination of reducing reliance on key knowledge points has enabled us to scale it, hasn't it, Michael?
Thank you. Another question around, obviously, once you've used the model and you've identified the scale-ups and reached out and started that engagement, what's the percentage of comebacks around asking for support and engaging further in the process? How's that look as part of the examples and case studies you've been working on? Is there a lot of follow-up following the reach out from the model and the identification, I think. And we've got a couple of colleagues that are asking different questions around that sort of engagement rate and reach out for support following working with the model.
Yeah, well, we never struggle with pipeline. I think is one thing we would say. I don't have the exact statistics off the top of my head, but in terms of response rates, but our approach is very direct. So you tend not to see, or we don't do a lot of wider marketing. Particularly, we're registered with our respective growth platforms in the regions and what have you, but we don't tend to run large publicity marketing campaigns. We tend to write specifically to the owners of the businesses that we identify with the curated comms that I mentioned earlier. We get a good response rate. I can come back on the specifics of that, but we never struggle for pipeline in any of our programs. But it's very direct and targeted.
I think that just to answer that is the uniqueness of the algorithms based on the benchmark data, and typically if we because we do the profiling of the businesses, we showed you that we understand the business requirements and the sector requirements. When we connect with them, we talk to them about we know that their business that these certain business challenges resonate with those types of businesses. We're able then to connect with them on that message. We're able to demonstrate that businesses in their sector have grown by 29% and employed 2.2 more people. And we're able to provide them evidence of case studies of organizations like themselves. So we don't do the network of network model. What we do is we actually practice what we preach, is that we use digital technologies to identify sectors, and we then scale that into the businesses. And I think 82% of our businesses adopt digital business technologies, and that's what drives the growth. So that really it's very, very targeted, obviously, because we know who they are. Once we know who they are and we have their requirements, it means that the success rate is we're not doing millions. We're doing very targeted approaches to that model. And Michael, we can send that. We've got that data somewhere because we've got CRM, haven't we?
Yeah, I just don't have it to hand.
Yeah, I think some of our colleagues would be really interested in that. So thank you for that. And we've also got a question in the chat around can the model and the tool be used for data related to sole traders?
It depends if our focus is on scale-up businesses. One of the reasons we've done that is that we realised that in the UK there's a lot of really good provision for startups and the bigger companies. So if sole traders are producing accounts, we can recognise them. But our tool is very, very focused on scale up potential businesses. So it's part of a regional portfolio we've taken a very conscious decision, Kate, to see how we can act as an effective partner with CAs, combined authorities, because we know that there's some great organisations doing different things. We are very, very focused on scale up potential businesses, and that's why we're a strategic partner with LCR on that particular area.
Thank you, Simon. We've got a number of reflections around colleagues who would like to hear a little bit more about your concept and your methodology. A few questions in the chat around that. Accepting that the exec summary probably shares a bit more of this, but could you talk a little bit more about the methodology?
Oh, yeah. I mean, we have an 8-stage process methodology, from data, from setting up GDPR, the location strategy, the moving through data capture, then into data management, into then analysis, report findings. So we have a very, very clear methodology on that approach. We have it's based on sectors, and our algorithm is already set up to identify growth potential businesses. So we have a very clear research methodology that's GDPR validated. And I can share that with you. If you don't want the whole report, I can share with you that section. And we use multiple public data sources to triangulate information against so we use all the common systems that you guys use, but we've created a unique algorithm that looks at the data from a couple of different perspectives, which we know is unique.
Thank you. That's really helpful to clarify that. A final question, just as we draw to the close of the webinar, around so how can colleagues on this call who have found this really interesting, you can see from the questions generated around the potential of the tool and the process, how can they get access to this tool? How can they work with you or engage with you further?
Well, I will put my email on here. Sherilyn's we're going to give the report to her to report. So if I put my email on here, and Michael, can you add yours, because I can never remember each of the emails. I've typed in my email. So we would be happy to, share a little bit more about we can share the document. We can do two things. Presentation will be sent to you, and we'll send you can have a copy of the executive summary in PDF form. And if you really, really want to have late night reading, we'll send you, we have to do it through document transfer because it's so bloody big, the main document. But the first two, we'll be happy to do that. And then if you are interested, it's about fitting people, but we do know that the timing is right for helping organisations to make sense of regions. So we would be very happy to chat with people about it.
That's great, Simon, and thank you for sharing those details. I'm sure many of the colleagues on this webinar would like to follow that up. Do you usually have like a partnership approach then when you're working? So if partners do reach out or interested, is that through a contract, a partnership arrangement? Kind of what does that look like? I suppose linking into the work that you did in Liverpool City region, how was that set up and governed?
Contract research is that we're just being commissioned by the Department of Business and Trade to support them. Obviously, we try and do it so the fact that it's viable, but it's contract research. Obviously, we own our methodology. We don't transfer that, but we work with our partners to align their objectives to our tool's capability. But I think once you see the report, it's will I be able to put it into Teams, Michael?
Suspect to be a bit big. You could try.
Is it 6 meg, the other one? I think it'll
It
go
might
in.
be a bit big.
Right, I
But we can
won't do that because
certainly
I
share
won't
it
do that because it'll
afterwards.
collapse the whole system. So,
Yeah, let's not
in
do
simple
that.
terms, in our language, we do contract research, whether that's funded, you fund that through, partners fund that through European funding or, sorry, localized funding, but it's contract research.
Yeah, that's great. Thank you. I think that will help colleagues understand
Yeah.
the types of partnerships that they can bring forward for their organisations or local areas. My colleague
Sorry, I
Sarah,
did. So just one more thing. In terms of that, so that's in terms of our growth observatory. Because that it's a specific service that really, in a sense, the ability if people are interested in the productivity innovation program, is that would be a partnership model, which we would be we do a train the trainer model to support people adopting it. So that would be negotiated, on a project by project basis. So the actual research we do, that's a service. We would be very interested to talk to people who would be interested in replicating the success of the Productivity Innovation Centre in their regions, and we have a model for supporting you launching and using those tools in your regions.
that would be fantastic, Simon, and Michael, and thank you for sharing all the work that you've been doing to bring this forward. And it's great to hear you're working with government now to think about future applications and linking into that national growth strategy work as well. As I said during the introduction, it feels really timely, for this model. So I'm sure many colleagues on this webinar will reach out to you. My colleague from IED, Sarah Lynn Challoner, has confirmed that we will share the report tomorrow along with the recording and along with the contact details as well that are also in the chat. So thank you. Can I then just draw us probably to a close at this point? Professor Simon, Michael, thank you so much for sharing your examples, your case study, and some of the work that you've been doing. It's excellent work, and you can see from the feedback in the chat. And on behalf of myself for the IED, thank you for bringing it to us to share and talk more about. And I'm sure we'll all be in touch. And for colleagues that are on this webinar, if you've enjoyed this webinar, then do get back in touch. We have future series of webinars taking place for the IED. Again, if you would like to find out more about joining the IED or organisations joining the IED, then do reach out and contact us, and we'd be happy to share more details or check out our website. On behalf of the IED, thank you so much for joining us this afternoon, and enjoy the rest of your day. Thank you, everyone.